Hi everyone, Nick Shaheen here for Benzinga. MarketFi create income with option spreads, recapping the week ending March actually expirations, so 3/14, and hopefully previewing 3/28, week ending 3/28. Pretty eventful week, I should say day, quadruple witching, which usually doesn't bother me too much, but today we sure had some excitement going on. We started the day very optimistic, except for the Nasdaq, and then we ended the day very not optimistic, including the Nasdaq. Anyway, so let's take the ES for example, the SPX. If we look intraday, it looks pretty nasty. Let's just delve into it. Straight down, except for the morning, from the morning open pop. However, if we start moving out a little bit, so let's take a look at the 5 minutes. So it'll give us a peek at a little bit of yesterday. So we had a run up that got erased today, but we still held higher. So what if I expanded a little more? I look at the 5 day, for example. Sorry about that. Look at the 10 day and grab a little look-see as to what's going on. So we had some scary moments. We fell off a cliff right here, and then we fell off another cliff. So we looked at some pretty scary situation here, 1823, which was still higher than what everybody's looking for. But if I'm looking at this, from a wide angle, wide as in 10 days, it's still looking like I have higher lows and I'm still knocking at highs. So if that usually is more bullish than bearish, in my opinion. Now we could have something geopolitically develop over the weekend and negate everything, but based on fundamentals and technicals, I still don't see a doom scenario. The Fed is still positive, even though some people are squawking, and she said 6 months, but she's still all it's predicated on the fact that we are improving. If we still need the Fed to be here, the Fed will be here. That was their message from Bernanke from last year, all of last year. We still can't get the grasp. So anyway, don't sweat the minute to minute. Look at the overall. Sure, there's potential to downside, but there's also potential to upside. And the least likely scenario is a whoosh down doom scenario without a negative catalyst. So if we get something negative over the weekend from China or geopolitical unrest in Russia, Ukraine, or something else, then maybe yes. But on its own, fundamentals, I'm still more comfortable than uncomfortable. So that is the SPX, which everybody talks about, the market. Apple today held up great. This is a company where I've always believed in it. I mean, it's the premier company in the world. They have more cash. They have decent, great margins, even though we complain about them. They're shrinking, but anyway. So proof that it is the piggy bank. On bad days, it holds up better than others. And even then, people hate buying it. As a matter of fact, they waited until the last few minutes to buy it, and it closed over 532, which, by the way, the members knew about these levels, 530 to 535 likely pin all week long. And once again, we nail Apple dead on. But the point is, they hate to buy it, and guess what? On red days, but they're forced because it is the deep piggy bank where you can hide your money. And on Monday, if we get a bounce, it won't be as loved as the rest. They love to sell it. So I still like to go long it. I still think that the 505 level will get defended hard. Without the doom gloom scenario that we talked about earlier. Google today, I knew that it had no reason to go above 1200, and that is from the open interest. So I did not chase it up. I tried to sell some credit call spreads in addition to what I already had. I had tons of it shorting. As a matter of fact, I had a very big set of iron condors in Google this week, and they all proved almost to maximum gains. But I didn't chase it. I didn't push it, and I wish I had, because I would have added to my profits. But no need to be greedy. Priceline surprised me a little bit at the level of selling. I sold the credit put spread towards the sell-off after the open pop at 1320. And I'm not sure what caused the sell-off. I'm gonna just need another day to evaluate. I sold the credit put spread. I closed it within about 50% of maximum gain, and it was at 1270. So I would have probably maybe broke out even with it had I held on to the end. Um, And if I had, I could have probably punted it into next week about $20, $30 lower for a break-even possibility. Regardless, I still like the company. It still is a momentum stock, and it has earnings as opposed to a lot of momentum stocks that don't, like Tesla. We will cover all of that. Netflix. Why don't I delve into the ones I'm concerned about? Netflix, Tesla, and Amazon. I like Amazon mid to long term. However, I've been covering it for a while, and let me go into it right now. What are we looking at here? Amazon. There we go. Sorry, folks. I'm working with a migraine today. This is a box of mine that I thought was a contested area where Amazon, has revisited once and again. Now, right here, I thought it was breaking out with this big candle. It was higher lows, knocking on a breakout level, and then boom, one gigantic candle on red days, I believe. Another one, but faded, and then still green, green, and then suddenly yesterday, boom. And then so I wrote it up yesterday, and I said, caution there, we might revisit the 360, and then later on 350 possibly, and then later on, if that fails, then it becomes head and shoulder-ish, and then 320 is in play. I mean, it can come pretty quickly. This is a violent stock, and if it does, then I'll back up and both hands. But until then, I still need it to show me something. Okay, I believe in the company, but I'm not going to give it my money unless it steps up to the plate once again for me. This is Amazon. Unlikely story that I haven't invested in Tesla for a long time, and especially not with the credit spread, because I don't believe in it as a company with growth. I mean, sure, what's it going to do? Is it going to get me to the moon? Now if that's not a flag, I don't know what that is. Knocking on lows from lower highs, that is terrible. So it would take a miracle for it to bounce right here. Not that it can't do miracles, but this is a pretty defining moment. Talk about a coin flip. So and with a gap right there. So flip the coin, buy call spread, buy put spread, wherever you think. If I was playing it, I'm not, but if I were, I would probably buy put spreads. So that would be my lotto ticket for next week, probably on Monday. Depends on how Monday goes. I said that, and I also said Netflix. Now Netflix, I gave it a pass a while back. The market gave it a pass a while back when it leaped up. And I said, okay, now it's going to trade like Amazon, where the market, because somebody wrote it up as far as global growth. Amazon gets a pass on margins because A, it's not bleeding, it's covering its expenses, and B, it's growing like crazy. When it starts growing, then you don't evaluate it as a growth company, and then you start saying, show me the money. For now, they're spending all the money to grow, and they are growing. There's no doubt about it. Ultimate growth company from the dot-com era. So I've done a couple of write-ups. Maybe we can link them here in the article. But the point is, the pass I gave to Netflix was based on global growth. And then now recently, the global growth has been challenged, theory has been challenged because of maybe some constrictions as far as infrastructure overseas. Maybe it's not as easy to grow globally exponentially, kind of like what we did here in the United States and maybe in Canada or United Kingdom or something. So that is one nasty candle, and anytime I get nasty candles like that, it deserves respect. So I will sit back and watch. If I'm long it, I will seriously cover myself. Not that I think it's going to break down, but these are things I need to pay attention to. CRM, same thing. I wrote it up yesterday. I'm glad some people read it and they tweeted me back about it. Right here, I thought this candle deserved respect. Kramer went and said no, he would buy the dips in that. I said too soon, and sure enough, we get another candle down here, and then it popped, and people said, see, told you. I was like, okay, maybe. I'd rather miss it than to grab a handful of blades when I'm trying to catch a knife. And then not soon after that, bam, 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 down to here, and I wrote it up again. I said, please, this is coming up against support. And we are at market highs, and it's looking head and shoulder-ishy. It might not be in head and shoulder technically, but the spirit of the head and shoulder bearish pattern is there. And sure enough, look at the candle today. And now, if you do look at the head and shoulder, it's probably satisfied right here. But I also pointed out the fact that we've had dips before, like from here to here. and then we had this extra dip, and then another dip from here to here. These were similar to that one big candle, and then we had an extra. So if you look at this candle, like this dip here and this dip here, right here would be equal to the extra after those two big dips. So right here, I would be willing to gamble on CRM, maybe with a credit put spread right here, and if I can get the premium. Otherwise, I'd rather miss it to see confirmation of a bounce. I'm not going to try to catch it. Okay, so these are the not so optimistic ones. The optimistic ones, I'm looking at Apple. Apple, I love it mid to long term, just because the company is a cranker. However, I don't love this fact that it's got a lid on it and it's going down, and it's going to be knocking on this level right here from lower highs. So this is where the defining moment comes, whether it bounces or the board breaks under it. Unless the markets break down, I'm banking on a bounce of some sort. It does have an event coming up, so keep that in mind. Google, it's printing money. Any dip in Google, I buy. How do I buy it? I do a credit put spread. Excuse all these drawings, I never delete them. Anyway, so I do credit put spreads. I did have several credit put spreads this week, 11.55.50 and 11.65.60. If you need more information about these, they both succeeded, by the way, totally. Just feel free to message me at RacerNick on Twitter and StockTwits. So you can hit me there, or MarketFi, I'm available there. As far as what else I can look at, people are, tooting the horn of Goldman Sachs again. I love this company, but there are so many technical patterns that scare me that I've opted out. And so far, I haven't missed out on anything. I'll jump in when I get the all clear, and I don't like what I'm seeing. The banks have been laggards, and there might be a reason why they're laggards. That doesn't mean they're going to catch up. Look at this, okay? Visa and MasterCard today on the open. Visa was, what is that, 233? Oh my goodness, 232, almost 233. It went down as far as 220, 19.8. And then they decided to doji the bad boy around exactly where they opened. So that, if that is not an indecision, I don't know what. There was a ruling of some sorts. I really don't understand who's winning, who's losing. The very confusing headlines. I did not read the articles yet. I'll do that over the weekend. I like the company. I was going to go long it recently because of these bounces off of that. But after this, right now the same, higher lows, but it's squeezing into top. If the markets break down, it's going to fall hard just because it's wound out so tightly. Let me look at real quick here, one last look. I did not do that. Let's see, maybe I'll change my mind here. Yeah, it's still a toss-up. So let's look at MasterCard. Anytime I look at Visa, I visit MasterCard, it's nastier because it had the same similar pop, but then did not hold it at all, and as a matter of fact closed down 3%. So here comes MasterCard knocking on level that is contested and very important. This is a level from which it broke out before, right there, and then it revisited and broke through, but then recovered and broke out again from. So broke out right here, revisited, broke through, recovered, and then tried to break out, and now it's revisiting. I like the company, but where's the hurry? And this is on heavy volume. So, giant candle like this, what does it deserve? Respect. You got it. Okay, LinkedIn was another one I was looking to go long. You know the story. About 180, I opted to stay out, and I'm still staying out. Lower highs, knocking on floor. This floor right here, I will wait to see what happens. If the market stabilizes, then I'll try to credit put spread it around here. If not, that has a lot of potential froth in it. As far as stocks, these were the ones that I wanted to touch on. I'll quickly glance at some other stuff that we had going on, and I'll pull this up and see if I can glance at it. CMG, oh my gosh, let's not talk about it. $600 stock. The NASDAQ got clobbered, so maybe I'll try some credit put spreads in the NASDAQ next week just to hedge my bet. Lulu, extremely hammered, is still a no touch for me. HLF, I'm just curious at it. I never touch it. It's under $50 now. Looks like, he who laughs last laughs the hardest. It looks like... Anyway, the short play on it wasn't as terrible as people made it out to be with all the fun that he'd been made. Ackman has been made fun. So visit, please keep nimble and don't panic unless there's a change in the thesis. There's no need to jump out windows, so to speak. The small caps today tried to run, the mid caps today tried to run, but they both failed, although the mid caps held up pretty well. The small caps took it on the chin after being up nicely. But I'm not panicking. I'm still believing that there might be some room or meandering at least, and at least I'm very comfortable that there's no doom scenario without a new negative headline. Until then, I'll talk to you soon. And if you have any questions, please follow up with messages on marketfy.com. They have a really good way of finding messaging me, and all you have to do is just plop in your email address and send a message. And the product over there is Create Income with Option Spreads. Thank you very much for your time.